about the first question, one thing I want from all of you is that stay active in the session and answer the option which you think is correct. Okay. So first of all, first question is saying which of the following RBI can use as a tool of credit control. The question is asking about that which of the following tools can be used by RBI to control the credit in the market as a credit control. Which of the following tools can be used by RBI? The first option is saying selective credit control measures. Second is saying CRR SLR. Third is saying bank rate policy. Fourth is saying anyone. It means out of the these three options, anyone can be used by RBI for the credit control. Now let me know which of the following option is correct regarding the question that RBI can use as a tool of credit control. So you have to answer the questions, and at the end I am going to ask you that how many questions you have done correct out of the total questions. So which of the following will be the answer, A, B, C or D? Answer quickly. It's a very simple question. First of all, as we know, there are certain questions which are 0.5 marks question, 1 mark questions and 2 mark questions. So we have to go from easy to advanced level. Okay. We have to go from easy to advanced level of questions because we know all patterns of questions will be there. So this is a kind of easy question for all of us. So if we talk about RBI's credit control tools, RBI has a multiple credit control tools which is used by RBI in monetary policy. Okay, which is used by RBI in monetary policy. So we got one answer, that is D. Bhashni is saying D will be the right answer. Okay, what about rest? Answer quickly which of the following option you think is correct about this question. Now, first of all, credit control measures will be taken by Reserve Bank of India in monetary policy. As we know, RBI has direct instrument which is used by RBI to control the money supply in the market, and also RBI has indirect instrument. Again, these instruments helps RBI to control the money supply from the market. Apart from that, there are two credit control measures or tools which is used by Reserve Bank of India. That is qualitative measures, and we have quantitative measures. Okay, we have qualitative measures and we have quantitative measures. Now the quantitative measures is also known as general credit control measures. It is also known as general credit control measures. Okay, and this qualitative measures is known as selective credit control measures. Okay, so these are the two measures taken by Reserve Bank of India to control the money supply, to control the credit control in the market. Okay, so direct and indirect instrument you already know. That is, direct instrument is CRR, SLR and refinance facility. Indirect instrument you have 7 instruments: bank rate, repo rate, reverse repo rate, MSF, LAF, OMO. These are the certain indirect instruments. So we have qualitative measures, we have quantitative measures. When we talk about the quantitative measure, these measures helps to change the volume of the money in the market. Okay, these are the measures, these general credit control measures are the measures which help to control volume of money supply in the market. And when we talk about the qualitative measures, these are the measures which tell us the value use. We simply can say value which can be used is defined by the qualitative concepts or qualitative measures. What does it mean? Value used means like in which particular sector you should use your money, you should give your money, you should give loan, you should do the credit control. That is told by the Reserve Bank of India that you can give the loan in particular sector. So that is a selective credit control because it is not applicable in whole economy. It is a selective credit control measure which decide in particular sector what we have to do, what we do not have to do. Okay, and the general credit control measures is simply controls the volume of money supply in the market. Okay, so as we have discussed everything I have told you about this, so what will be the right answer? Right answer will be anyone can be the right answer. Because CRR, SLR both are the part of quantitative, it is a part of quantitative credit control measure. Because if you are increasing CRR or SLR or bank rate or decreasing these, so they control the volume of money in the market. Okay, both CRR, SLR, or we can say bank rate, repo rate, reverse repo rate. All these are the indirect instrument and direct instrument which helps to control the volume of money in the market. So these direct and indirect instruments comes under the qualitative control measures, or we can say general credit control measures. Okay, so the right answer will be D, and Shubhanshi has given the right answer. Sonam and Anantha, it will not be the A, it will be the D answer. Okay, any one of the following, any one of the above can be used by Reserve Bank of India to control the credit, to maintain the credit control in the economy. Okay, so right answer will be D. Let's move forward to the second question, and it is asking about requirement relating to CRR. Requirement relating to CRR to be maintained by banking company are given in. So under which particular section of Act it has given what is the requirement to maintain the CRR by the banking company. First is saying section 42 of RBI Act 1934. Second is saying section 42 of Banking Regulation Act 1949. Third is saying section 18 of Banking Regulation Act 1949. And fourth is saying section 42 of RBI Act 1934 for scheduled bank, and section 18 of Banking Regulation Act 1949 for non-scheduled. Now, which of the following will be the answer? Now, this is a tricky question. This is not easy level question. It is a moderate level question, we can say. Because to answer these type of question, you should know about the particular act. You should know the principles or the regulations of the banking sector, so that you will be able to answer the particular question. So which of the following will be the right answer? Acha, do one thing whenever you are answering a question, just mention the question number. Like two question number will be mentioned and answer you will put there A, B, C or D, whichever you think is correct. Okay, do mention the question number. It will be easy for me to understand that for which question you are giving the answer. So the question is asking requirement relating to CRR to be maintained by a banking company is defined under which of the following section? A, B, C or D? D and B, we are getting two options. Okay. First of all, if we talk about the requirement relating to CRR to be maintained, if we are talking about the what are the requirement of maintaining CRR, it is defined under section 42 of RBI Act 1934 for scheduled banks and section 18 of Banking Regulation Act 1949 for non-scheduled banks. So right answer will be your D. No, second right answer. First of all, if we talk about where section 24 defines the SLR. Okay, and when it comes to the requirements which is related to maintaining CRR by banking company is defined under the section 42 of bank. These are the banks which are mentioned under the second schedule of Reserve, Reserve Bank of India Act 1934. So those banks who are mentioned under the second schedule of RBI Act comes under the schedule bank, and those banks who are not listed, who are not mentioned under the RBI Act, these are comes under the non-scheduled bank. Okay, has to fulfill is that they have to maintain the CRR or SLR. This is the mandatory condition if you want to come under the second schedule of RBI Act. And the second condition is your paid up capital should be more than 5 lakh. If any bank fulfill these two conditions, then that bank will be under the second schedule. The bank will be under the second schedule of RBI Act 1934, and that bank will become scheduled bank. But those bank who has not fulfilling these two criteria, bank what is non-scheduled bank? We have also discussed that where the CRR is defined and where the SLR is defined. Okay, do remember all these concepts. Don't just go with the question and option. I am giving you the concepts also here. I am giving you the certain important points which is important for you to remember. Okay, so do remember each and every detail I am mentioning here. Now let's move forward to the third question, that is asking about which type of NBFCs out of the following can be registered with RBI. So out of the following, that is asset finance company, infrastructure finance company, investment company, which of the following company, or we can say the NBFC, is comes under the registration of Reserve Bank of India? So what will be the right answer? A, B, C, or D? Saurav is saying D. Okay. So what about rest? Ananta is saying A. Third is A. Okay. First of all, those candidates who are live in the session, do like the session once. And also share the session on Telegram, Facebook, or any other social media platform from where you are connected with your colleagues who are preparing for the same exam. Shubhanshi is saying A. Okay, so the right answer is D, not A, all of the above. So all of the above NBFCs can be registered with Reserve Bank of India. And first of all, you should know that things that in India, if we talk about the financial institution, we have banking institution and we have non-banking financial institution. And banking institution, we know it comes under the RBI comes under this now: scheduled bank, non-scheduled bank, commercial bank, non-commercial bank, cooperative banks. All these banks comes under the banking institution of our country. If we talk about non-banking financial institution in our country, we have three categories, that is AIFI, All India Financial Institution, then we have NBFCs, and then we have primary dealers. These are the three categories of NBFIs. Okay, so if any company, if any institution wants to work as a non-banking financial institution in a country, they have to be registered with the Reserve Bank of India. So similarly, asset finance companies, those companies who are giving finance on behalf of taking assets of the customer. Infrastructure finance companies, those companies who are giving finance for the infrastructure purpose. And investment companies, those companies who are giving you money, who are lending you advance or loan for the investment purpose in the share market or any other market, that will be your investment company. So all these three types of companies can be registered under the Reserve Bank of India. So right answer will be your D, all of the above. Okay, now if we talk about NBFC, non-banking financial companies, non-banking financial companies are those companies which gives advance and loan in a particular sector where they can earn the more and more money. Okay, so that is NBFC. There are a lot more types of NBFCs there, which is regulated by RBI or Adda or Ministry of Commerce and Industry. Okay, we are going to discuss all the types of NBFC in the conceptual classes. Okay, now next is fourth question, that is talking about the component of financial system consisting mainly of banks, financial institutions, NBFCs, primary dealers is regulated by. So who regulate the components of financial system which consist banks, financial institutions, NBFCs, primary dealers, etc. Is it PFRDA, Pension Fund Regulatory Development Authority? Is it SEBI, Securities and Exchange Board of India? Is it Ministry of Finance, or is it Reserve Bank of India? So which of the following will be right answer about your fourth question? A, B, C, or D? Let me know which of the following is the right option. It's a very simple question. Again, a easy question it is. I have discussed this question just now, that who regulates or who. Sonam is saying D. Okay, do mention the question number whenever you are answering a question. Okay, it will be easy for me to understand that which question answer you are giving. So do not forget to mention the question number. So Sonam is saying D. Saurabh is saying D. What about rest? It's a very simple question. If we are talking about the component of financial system, that is bank, financial institution, NBFCs, primary dealers, all are regulated by Reserve Bank of India, that is the central bank of our country. So the right option will be your D. Now PFRDA regulates the pension sector. SEBI regulates the investment market. And which is investment market we are talking about? We are talking about long-term investment market, that is your capital market. Capital market is regulated by SEBI. Apart from capital market, mutual funds are regulated by SEBI. Credit rating agencies are regulated by SEBI. Okay, etc. So these are the foreign portfolio investments are regulated by SEBI. So all these are regulated by the SEBI. So here the right answer will be your RBI, Reserve Bank of India, which regulates the banks, the financial institution, the NBFCs, and primary dealers. Next, making or issuing of a promissory note. Now, do understand what is promissory note. You should know what is promissory note. So, question is saying making or issuing of a promissory note expressed to be payable to bearer thereof by a person other than RBI or central government is prohibited under which of the following section? Is it 126 of NI Act, 31 of NI Act, 31 of RBI Act, 24 of Banking Regulation Act? So which of the following section is correct? Which of the following act is correct in which it is defined that making or issuing of a promissory note is expressed which is to be payable to the bearer thereof a person other than RBI or the central government is prohibited under A, B, C, D? Which of the following is correct? Mahi is saying B. Mahi is asking, is it B? Okay. What about rest? Ananta is saying B, that is section 31 of NI Act. Okay. Saurabh is saying A. Dilip is saying B. What about rest? Vinay is saying A. Okay. It's not NI Act, as we know that when we talk about the promissory note, so one thing comes in our mind that it definitely will be Negotiable Instrument Act 1881. But it's not NI Act, it is RBI Act. So right option will be your C. We are not talking about where the promissory note is defined. We are not talking about the definition of the promissory note. We are talking that making or issuing of a promissory note expressed to be payable to bearer. Okay, the person who has the right to take the money from the particular note, that is known as bearer. Thereof by a person other than RBI or central government is prohibited under. In which particular act it is prohibited? That's the question which is asking. So right answer will be your C. If the question was asking where promissory note is defined, so we can simply answer section 4 of NI Act 1881. But it is asking about the prohibition condition apart from RBI and central government. Okay, so right answer will be your C. Now do remember this question because it is important. As we know, promissory note, if we talk about the promissory note, okay, and then we talk about the bill of exchange, or if we talk about check, all these are the negotiable instrument, and whenever we heard about these three terms, we directly go to the NI Act. Okay, but that is the definition given under this particular uh, act. Okay, in NI Act 1881, section 4 defines your promissory note, section 5 defines your bill of exchange, and section 6 defines your check. Okay, so this is what you have to understand, that when it comes to the definitions, when it comes to the what is promissory note, then it will becomes under the Negotiable Instrument Act. But if we talking about the prohibition, the person other than RBI or central government is being the bearer, then the prohibition condition is defined under the section 31 of RBI Act 1934. Acha, one question I want to ask all of you, that holidays are defined under which act of banking sector? Holidays of banks is defined under which act of banking sector? Yeah, sure. PDF will be available on the Telegram channel. Don't worry about that. Okay, I will share the PDF of today's session after the session ends on the Telegram. Okay, Paul. Now let me know in which particular act the holidays of banks are defined. Very good. 456 is NI Act for promissory note, bill of exchange and check. So answer about the holidays of banking sector. Now, first of all, as you are preparing for November exam, and this is the last time in this is the last chance for all of you that you can qualify this particular exam by having a old syllabus, by having a old pattern of the exam, because in 2023 the syllabus is going to be changed. Very good, Subhashni. The right answer is NI Act. NI Act defines your holidays of banking sector. Okay, very good. Everyone is saying NI Act. Correct answer. So now let me know, out of 5 questions, how many answers you have given are correct? How many answers you are given correct? Let me know out of 5.